Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 295 on November the 3rd, 2023. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Riot Platforms, the Proshares Trust 2 Ultra VIX short-term futures ETF, and Macy's. And we discuss 3 new trades on Lyft Inc, Cameco Corporation, and Intel Corporation. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. And for anyone that wants to learn how to trade options or simply get better at how they're already trading options, we've launched the Weekly Option membership group. The group features video training that can be accessed online when it works best for your schedule, daily interaction with me and others in the group through a chat group, and ongoing videos and webinars to make sure everyone is up to speed and gets the help they need. This is a community of option traders that can support you in your growth. Email me immediately if you want to learn more about becoming part of this exclusive group. Now, this week was quite the week for market rallies. In fact, we haven't had a one-week rally this strong since last November. The Dow Jones Industrial Average gained 1,643 points, closing at 34,061 points. The S&P 500 index gained 240 points, ending the week at 4,358 points. And now it's time for the topic of the week. The topic of the week this week is fear. Consider this a little bit of a therapy session or confessional. I still have fear when it comes to trading. I still am afraid to do the very things that I know I should do. Sometimes I trade 5 spreads when I should have traded 10. Sometimes I don't put a trade on at all, even when I'm 90% sure where the market is heading. I don't wear an S on my chest or even have a cape. I don't leap buildings in a single bound. In fact, every now and then, my stomach sinks just before I enter the trade. It still happens, and I've been doing this for 20 years. After all this time, it still happens. And that's why I like math. Trading options, specifically trading option spreads, it's nothing more than simple math. I can size my risk exactly how I want. I can design trades to give me the gain that I need. And if I feel too much fear, that lets me know that I should reduce the amount of risk that I was about to take on. I wanted to admit this so that everyone knows that managing fear is part of trading psychology. It's part of the game. Some of you have all the tools to trade, but haven't taken the first step. You're still afraid to buy or sell a spread. Every week on this show, I present trades that have no more than $1 of risk. That translates to $100. Many of the trades are 50-cent wide spreads, meaning there's only a maximum of $50 at risk. If you're not willing to risk $50 on a trade, please do not buy anyone's $3,000 or $4,000 trading course. It won't help you. I sometimes have to decrease the amount of money at risk in order to have the courage to place the trade. You might need to do the same. Trading is a very personal endeavor, and we all have different drivers that affect our behavior. I don't ever expect fear to leave. I expect courage and confidence to increase. If there's no fear, there's no courage needed to overcome the task. It takes courage to try new things. Over time, that courage gets replaced with confidence. That confidence becomes the voice of encouragement when fear tries to get in the way of you making the trades that you really need to make. Don't get rid of fear, have more courage. So let's get into the trading review for last week's trades. We'll start off with the covered call on Riot Platforms, symbol R as in Romeo, I as in India, O as in Oscar, T as in Tango. At the time, the stock was trading for $9.54 per share. I looked at buying stock and selling the November 10 call at 79 cents, hoping for a return of 13.10% in 3 weeks. Well, shares of Riot grew $1.85, ending the week at $11.39 per share. The call option we sold gained 88 cents, leaving us with a net profit of 97 cents if we were to close the trade out immediately. Now, with stock above $10 per share, you'll likely lock in our maximum profit of $1.25 in 2 weeks upon expiration. So it all really depends on if you want to keep the risk on or if you want to close the trade off and go ahead and redeploy the capital. But this trade has worked out as planned, no adjustments needed. Our second trade last week was a credit spread on the Proshares Trust 2 Ultra VIX short-term futures ETF. Symbol U as in uniform, V as in Victor, X as in X-ray, Y as in Yankee. At the time, the stock was trading for $19.77 per share. I looked at selling the November 17 put spread at 16 cents. That could give us a maximum possible loss of 34 cents per spread. Well, shares of the ETF lost $6.14 per share, ending the week at $13.63 per share. The out-of-the-money put spread that we sold is now deep in the money. You would essentially pay a full dollar if you tried to turn this spread, the short spread that we sold, into a debit spread. So it's really not worth it. This is the prime reason why I trade spreads and not just outrights, single options. The risk is capped from the start. So the money you would collect from selling a higher strike call spread isn't even enough to make it worth it as well. So turning this into an iron condor would not be profitable. And I also want to warn against anyone considering selling a lower strike call spread. You could actually create a scenario where you lose on both spreads, multiplying your risk instead of actually taking it off. So on this one, I'll take the loss and walk away reminding myself not to trade a short volatility futures ETF. Again, you guys can remind me next time I suggest it. The VIX index decreased and I sold a put spread on volatility futures, which was essentially a long volatility spread or something like that. Anyway, this one was a loss. I'm going to take the L and walk away with my tail between my legs. And finally, last week, and better for my ego, we had the debit spread on Macy's, symbol M as in Mike. And at the time, the stock was trading for $11.69 per share. I looked at buying the November 11 half call spread for 31 cents, which could give us a maximum gain of 19 cents, or that's the 61.29% return in 3 weeks. Well, shares of Macy's grew $1.25, ending the week at $12.94 per spread. The in-the-money call spread that we bought is now even more in the money. The spread is nearly $1.50 in the money, meaning this spread is working out very well so far. We still have about 2 weeks left until expiration, so keep track of stock, but no adjustments are needed on this one. It is winning as is. So that's it for the trading review from last week's trades. This week is going to be the last week that we're going to look at November options. Next week, we'll start using the December expiration for monthly options in the month of December. Just know that because there's a shortened trading week on the trades that I present today, these trades, because there's less time, these trades are inherently more risky. So always keep that in mind. Time is built into option prices, and time is actually a benefit to you if you buy a spread. And actually, even if you sell a spread, normally we think of selling options as collecting time value every day because options decrease based on that time value. But the other side of that is if a trade goes against you, you still have less time to adjust it. So I'll just say that shortened time means more risk. So let's dive in with the covered call on Lyft Inc. Symbol L as in Lima, Y as in Yankee, F as in Foxtrot, T as in Tango. The stock ended the week at $10.66 per share. I'm looking at buying stock and selling the November 11 call at 71 cents, hoping for a return of 9.85% in 2 weeks. Well, you enter this trade by buying stock for $10.66 per share and selling the November 11 call at 71 cents. This trade makes the most money if stock prices finish above $11 per share. The break-even price on this trade is $9.95, and in real terms, the stock purchase would require $1,066, and you'll collect $71 for selling the option. Next up, we have a credit spread. I'm looking at Cameco Corporation, symbol C as in Charlie, C as in Charlie, J as in Juliet. The stock ended the week at $41.96 per share. I'm looking at selling the November 41 put spread at 17 cents, which could give us a maximum possible loss of 33 cents per spread. Now you enter this trade by selling the November 41 put at 99 cents and concurrently buying the November 41 put for 82 cents. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $41.50 per share. The break-even price on this trade is $41.33, and in real terms, you would receive $17 per spread that you sell and have $33 at risk. And our final trade for the week is going to be a debit spread on Intel Corporation, symbol I as in India, N as in November, T as in Tango, C as in Charlie. The stock ended the week at $38.14 per share. I'm looking at buying the November 38 call spread for 31 cents, hoping for a maximum gain of 19 cents, or that's a return of 61.29% in 2 weeks. Now you enter this trade by buying the November 37 call for $1.16 and concurrently selling the November 38 call at 85 cents. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $38 per share. The break-even price on this trade is $37.81, and in real terms, you'll pay $31 to enter the spread, and your maximum gain is $19 per spread. So that's it for this week's show. Thank you for all of you guys who have emailed me and continue to email me. Thank you so much for listening to the show. Hey, I appreciate each and every listen, each and every share I get. So thank you for my newest fans all the way to the people who have been with me since day one. It's fantastic. I hope you guys have a fantastic weekend. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.